In this lesson, we're going to discuss exhaustion candles or exhaustion bars. How do we identify them? And more importantly, how do we use them to our advantage? Here we're looking at a daily chart, and I just want to give you different flavors and different charts from time to time because I also want you to understand, as I've mentioned before, all the components that we discuss can be applied on a 5-minute chart, a 10-minute chart, an hourly chart, a daily chart, a weekly chart. It doesn't matter. All the charts are really the same. The time doesn't really matter. It's how the candles act and react as it relates to time and the patterns that exist on the charts. So here we're looking at a daily chart, and what you can see here in the middle of the screen is an exhaustion candle. And what makes it an exhaustion candle? First of all exhaustion candles will come at the end of a move, signifying exhaustion of that move. If the market was moving higher, the exhaustion candle would be green. It would be at the top of the chart, and that's at the point when we would be looking for a trend change as a result of the exhaustion candle. In this case, we're looking at a market that was selling off significantly, and we have an exhaustion candle signified by the fact that this last red candle with this tail low here has enormous volume in comparison to anything else you see on the chart. That's a telltale sign of exhaustion coming. You would generally find an exhaustion candle after a several candle move on the chart, meaning the trend has been in a certain direction for a period of time, and that trend is about to come to an end, and the market is exhausting the move. It's the finishing of the move. In this case, because the market was going down, this could be viewed as capitulation, also known as an exhaustion candle. Heavy volume in comparison to the rest of the days in this case, or the rest of the candles of recent. Market was down for several days in a row, and therefore it qualifies as an exhaustion candle. But at the time, on this day, for example, how would you know that the following day wouldn't be a bigger up day in volume and another down day, and maybe that day would be the exhaustion candle? Well, at the time, you wouldn't necessarily know, but we would have to use other things taught in this course, how to identify the possibility or probability of a trend change. The heavy volume is a great indicator, but it can't be the only indicator. We would have to know that the market was coming into a support from some other point in the past. We're going to get more into identifying support zones or resistance points later in the course, but the point here is that you have to put together the probability of an exhaustion candle with other items on the chart, other technical factors that could exist that would give us more evidence or more clues that this move would be coming to an end and there was a possible trend change ahead of us. So to prove out the point that this particular point in time on this exhaustion candle was coming into an area of possible support, let's put a line at the bottom of this candle where it stopped short and started to reverse, and let's try and find an area on the chart in the past where it would make sense that this market at this particular point in time was coming into a possible support area. The bottom of this candle comes in at 1781. Let's go back in time and see if this is an important area on the chart. So what I've done is squeeze together the chart a little bit so that we can get a longer term picture. And what you see here is where the blue circle is identifies the area we were just looking at, the 1781 low. And when you go back in time, and this happens to be about 10 months earlier, down in this zone here where the market put in an important bottom and traded away from it for quite some time. Markets like to come back and retest important lows and important highs. Sometimes they pierce through them, and sometimes they come up short, and sometimes they hit them on the button. But when we're coming into a zone where there was an important low, and 10 months later we were coming into a zone where there was an important low, we start looking for evidence of a possible opportunity in the market. So in this case, We know we were approaching an important low from 10 months earlier. We see a potential on that day exhaustion candle on heavy volume. That's a pretty good indicator that the market is getting ready for a trend change. So we compile the evidence, we compile the pieces to the puzzle to try and put together the next probable move in the market. Now, you'll obviously have trend changes on short-term charts and long-term charts, but you won't find exhaustion candles like this on short-term charts each and every day. You'll find them from time to time, and what I can tell you is you're better off using an hourly chart, for example, to identify an exhaustion candle, to identify the larger trend change at hand in the market, and then you can make trading decisions off the short-term chart. One of the reasons why it's very important to be able to identify the larger trend change is because some of your biggest trades will happen when you're able to identify a trend change and ride the wave in one direction or another for multiple candles in a row rather than a quick scalp trade. That's why being able to identify the end of a move, whether it's with the market going up or the market going down, is going to be your largest opportunity for your best trades.